but the time is approaching when I think I will.
Now we're recording.
Okay, all right, so modulars.
So modular, the DOE last week finally gave final approval to our ESSER 2 and ESSER 3 applications. Both those applications included a portion of the modular project. So right now, that's been approved, and we can go to the next step, which is putting the architects in touch with some potential bidders on the project. And we'll keep you informed as we go along.
Cool. And what is the next stage of that process after? So it goes out to bid, and then what happens?
It's going to go out to RFP, not to bid, because we don't really have the specifics. So we'll have to, kind of work with each company to generate comparable projects. They're going to come back with their designs, their costing, based on the information we have about the locations, which the architects already kind of provided us, and we'll provide to the 3 or 4 modular companies that I expect that will be looking into this.
All right. So the big question is timing. What do you think? Because timing relates to having it ready for next fall and having it ready so that we can move out of McLean.
So I'm not going to venture into that right this second. I don't know. It's all I guess. I can tell you that John and I are meeting with the city quarterly now about this to make sure that we're all on the same page as to where this project stands and how that affects the McLean building. We just met with Tom Luttrell, Julie Hashem, and Sarah. What's Sarah's last name? On the council?
Counselor? Austin.
Yeah, Austin. So we all met last week, went through the update, and then we are meeting quarterly on the first Thursday of each month, which will also coincide of each quarter, which will also coincide with the board meeting, so we can actually update the board at the same time with what we're discussing. But in terms of time, I don't know yet. We don't really know what the construction side of this is gonna be in terms of delays. We don't know about the supply side.
I know, so John, my impression, and tell me if I am wrong, but my impression is it's really hard to move out anytime but the summer, move out of McLean.
We basically can't do it any other time but the summer. The biggest thing is going to be the IT department. It's really the biggest challenge. They have to build out their infrastructure at the new location, because it isn't as simple as just unplugging a computer and taking it across town. It's much more involved than that. So as I think Pete said, the best we can do is just update the city representatives. We're very happy with what we had to say to them, and they're happy that we're communicating. And as long as we continue to do that, I think the city will be fine with us, whatever we end up doing.
The last thing is, and you can correct me if I'm wrong too, but I have this underlying need to get out of the building because it has a shelf life, right? I mean, all parts of the building are not forever until they're renovated, right? So,
well, we want to do that too, Laura. We absolutely want to do that too. So
yeah, just a little worry in my head about things, but okay, thank you.
I have a question on the RFP. Are we including annual maintenance costs in the RFP? Estimates of annual maintenance cost? You're muted, Peter.
We'll have to estimate those ourselves.
Sorry?
We'll have to estimate those ourselves.
The different kinds of construction, different materials can have a significant difference on the estimated.
And different estimates, whether it's $14 a square foot on old buildings or $6 square foot of new buildings. I don't know what the modular market is like in terms of estimating costs for maintenance and upkeep.
Peter, it's Maria. I have a question. Are we looking to purchase the modulars or lease them?
Purchase.
Purchase. So they're going to become a permanent part of the infrastructure at the high school.
Yeah, they're permanent modulars, not portables.
Okay.
And they'll also be at the middle school as well.
Okay. Thank you.
So there'll be either a slab or a frost wall foundations on these.
Mhm.
Handicap accessible, either walkout or ramps at both locations. Full
And
fire
again,
suppression, full security, full connectivity.
Gotcha.
And again, for anybody watching not aware of it, to be clear, these are paid for by COVID federal support money, not by local taxes. So we're very lucky to have that kind of assistance to meet the need now and to be able to utilize them into the future.
Yeah.
John,
Peter.
John. Oh, sorry, Maria. Did you have a question?
I was just saying that Peter mentioned that this was part of the approved projects for the ESSER grants at the very beginning. So, yeah.
John, I was curious, it seems like the timing piece is relevant only for our IT department, because of course you can't have IT going down in the middle of the semester because we rely on it so much. So is it possible that we can do something that's like phased, like we do the IT over the summer, but we don't fully move out, so that we can do that one section faster and then work on the others?
Yeah, I think that's the way it's going to end up being. It's easier for us to move just offices as opposed to that kind of infrastructure. So,
But
Okay.
John, I did a lot of moves. I worked for telecommunication companies and frequently assisted customers in planning moves. You still need some data facilities for your staff. Correct? Spam risk. So don't you still need data facilities for your staff if you move them piecemeal, do this move?
yeah, we will. That's why I say really it's kind of critical to do that over the summer, because we're not going to be able to, pull up stakes and move during the middle of a school year. We do payroll, we do all kinds of functions out of the office. So
Yeah.
No, it's not that simple.
Oh, I know.
I mean, that being said, though, we have kind of vast experience with very complicated moves that we've done over the years with the school
Right.
system. We've
And
relocated whole schools from one building to another. So we're good that way. It's gonna have to be timing sensitive. That's all.
I'm sure you have good vendor partners as well to facilitate, help facilitate the moves, make it smooth.
All right, and Pete, what time, you said the auditors will be here around now? Can't hear you.
Yes, right around
Okay.
now.
Are there any other questions about modulars I forgot to ask? Okay. I'm hesitant to start another topic just because if they show up, we'll have to sort of stop it in the middle. So let's give them a minute.
I've got a topic to bring up quickly.
Sure.
So we all got a email about ed techs and keeping them and paying them. And I know we have a contract, but I also know that the job market is tight and employees have choice. They have a lot of choice. So I don't know, John, how you want to proceed to this, but I certainly am concerned. I mean, especially we talk about how we have to have an environment where we meet our kids where they're at, and we need a lot of people to do that in the jobs that we have. So just wondering what you're thinking about that. Are we seeing a difficulty retaining, or do we have to do anything? And we, meaning the district, which could be you, you decide what to do. But as a school board, I know as a school board member, I'm definitely concerned about it.
Can I interrupt for a second and just make sure? I know Dave didn't get the email. Maria, did you get the email?
Yes, I did, and I read it.
Okay, all right, good. So that means it's, all right. And Dave's I forwarded it to Dave, so he's at least had a chance to read it. Okay, John, go ahead.
So rather than get into a discussion about that here, what I'd like to do is I'd like to talk to the negotiating team. We have to have a meeting prior to the next round with teachers anyway, and I want to talk about the support staff contract a little bit with that group before we talk about it in finance. So if we could
Okay.
make that happen.
Yep.
Wait,
I don't
shouldn't we
know.
talk- Shouldn't we talk about it with the board before we talk about it with the negotiating team?
That's not my order of operations. I think the team needs to be apprised of a couple things, and then we'll have a more full discussion, but
Well, then we bring it to the board, yeah.
I'd actually, I don't know, Lauren, if it's possible. I haven't even talked to Pete about this, but if you got in, do you think we could do a meeting tomorrow night with the negotiating team? We have to anyway before the next meeting,
What time?
4:30,
Just for the team, because
just for the team.
Tuesday night with them, right? So
Wednesday.
Could we do Thursday before the meeting instead of Wednesday?
I can't. There's just
Okay.
no possible way. How about 5 o'clock tomorrow instead of 4:30? I have a lot of work to do. I just try to get it done before.
Yeah, I can do that too.
Okay.
I'll put it out there and see if others can make it. But we need to meet anyway before next week, so I just thought maybe we could grab a meeting tomorrow night.
Okay.
All right, thank you.
Yep. What time we got?
Yeah, it's 5:20. So let's move on to another item on our agenda. And then we'll just wrap, we'll see where we are when they arrive. All right, so last meeting, I'm going back to old business. Number 1, policy suggestions to review. And the item is budget transfers. So in the last meeting, we were talking a little bit about, and part of that was related to the audit actually, is that the audit last year flagged that we should be working on making sure we had board approval for transfers between articles. And that led to a conversation of, well, what are we doing with transfers within an article? So say we budget for a position and we don't fill, and we fill it. Well, actually a better example is, let's say that we budget for a position, we can't fill it with a full-time person. So we end up contracting out. And so there's a movement within the article, but also an additional cost most likely. So one of the things that I thought that we should do is actually create a policy around that. And that was Pete's suggestion there. And so we don't have any existing models for this policy. And so what I was thinking is that see if anyone's interested in creating that policy, and also just sort of brainstorm what kinds of things do we want to think about in that policy, and just sort of kick that off in a general sense.
When do you need it done by?
Whenever we want to have it done by.
Well, why don't we just meet and throw together some, or put together some verbiage that we probably could do that in one meeting, and then have a couple of folks, Peter, John, Lauren, proof it before it goes to the board.
Yeah, and actually, I don't think we need the whole committee for that. If 1 or 2 people want to take that on and then bring it to the committee, we could, that way we can kind of streamline the meetings that we have.
Maria, you want to deal with it with me?
Yeah, let's just do it.
Okay. That's
Okay.
okay with, and second thing is, when Maria and I have a meeting, do we have to post it?
No.
It's 3. Well, I thought it was more than 3, but apparently it's 3 or more.
Yeah.
I thought we have a majority of the of the committee, that's all.
No,
Yeah, no. It's based on the board size, not the committee size.
Chat to you and tell me what. So Chelsea, you're talking about a policy change, right?
Right,
New
that
policy.
we add a finance policy.
It's creating a new policy, Lauren.
Right. So what I think when we think about doing something like this is that the policy committee should meet in conjunction with finance and vice versa. Like there's something in the policy committee, which I'm blanking on right now, that we want to make a change to. And I think that rather than one committee doing it and sending it over, maybe we should all just have a meeting together, talk about a change that relates to, a policy, but it's a financial related item. What do you think?
I feel like it's a lot of meetings, to be honest. But I mean, I get your general point is that it does lead to some confusion potentially, and some, like, we have to explain things frequently. And sometimes I think that falls on you, Lauren, to do, because you're the person who's going to all those meetings.
Yeah, no, it's true.
Don't you think that it's easier to critique, add, subtract to something that's in front of you? So if
Yeah,
David
no.
and I took a shot at putting together 2 or 3 or 4 sentences and then
yeah.
just presenting it to, giving it to the policy committee and the finance committee, I think it would go quicker.
No, you're right about that. I agree with that. It's just that when we deliberate as a committee, should we meet as the committees to deliberate together? And then there's something forward to the board. It just may be more efficient to really get down to, yep, here's a proposed policy change or new one.
Mhm.
Lauren, how did you feel that when we did the DJA and DJH policies, how did you feel that process went?
To remind me what those were again.
I was using the letters because I don't remember what they were. It was they were procurement related.
Procurement, federal procurement.
Yeah, I know. I'm not saying we have to do it that way. I'm just bringing it up like.
Well, no, I'm just thinking workflow. I'm just trying to evaluate how it work.
I don't remember well enough how that all
Okay.
went.
Why don't you see what Maria and I get together, and then we can figure out where we want to go with it. Is
Okay,
Yeah.
that's fine.
that okay with you?
Yeah, sure.
And I think it may also, for something like this, as Lauren, you're pointing out, this is like a major change. So maybe we do want to meet for major changes, but for tweaks like those previous policies, we don't necessarily need to meet. And that could strike a good balance.
Yeah, be a good standard to follow. Yeah.
And
Okay.
I know that we're going to need you because I know I still don't have all of the correct terminology down for, the sub charge codes within an article. I don't know what the correct terminology is, but that's the kind of thing too that I would hope that you folks would inject into what Dave and I come up with.
Okay.
Smoothing out the terminology and stuff and whatever.
Are there
Okay.
any questions, Maria and Dave, that you can think of right now that you'd like input on, or do you want to just go for it and then we'll do the input after the fact?
I'm not ready to ask questions.
That's fine.
Yeah, I'm not either.
Okay, sounds good. All right, thank you all for taking that on. All right. So that concludes old business number 1. And Brittany, welcome.
Hi, sorry, I'm a few minutes late. I was having trouble with the link, so.
Oh, okay.
Finding
We
the
have
link.
that happen often. Do you, why don't I introduce us and then you can introduce yourself. And one of the things that I want to note is that we have 2 new committee members who have not gone through an audit process. So if you can really focus on that kind of high level, what we should be looking for in an audit, that would be really helpful for us. So
Sure.
John and Pete. You may know Lauren, and I'm Chelsea. So Lauren is the board chair. I'm chair of Finance and Facilities. And then we have Maria, who is a new board member. And then we have Dave, who's half of Dave's at any rate. So welcome.
Yes, thank you very much. My name is Brittany Gilman, and I was the audit manager this year. Got to work with Pete, work for RHR Smith and Company. I'm going to apologize in advance because we're in the witching hour or the witching 15 minutes between when Dad gets home and when I'm solo with
I know that one.
kids, and I have to grab one right now. So just 1 second. I'm sorry.
But
We had a very cute little kid join us for the board meeting the other day. It was fun.
How's this one?
Nice to see another cute one. Hello.
And so, yeah, I had the privilege of working with you all this year. And essentially what I try to go through during these presentations is sort of the high level overview. So I won't read the audit report to you, which I know you're all very disappointed about. But I will try to hit the high points, and then you can ask questions if you have them. So do you all have a copy of the draft audit? Okay.
Yes.
So I'm going to be referring to page numbers throughout this sort of discussion. And when I'm referring to the page number, I'm referring to the number at the bottom of the page. Rather than if you're looking at it in a PDF, it doesn't always align with the PDF number up the top of the page. So for now, I'm going to forgo sharing my screen because that tends to make people a little seasick when I'm scrolling through the audit. But if I need to pull it up and share something with you, I'm happy to do that. So really the purpose of an audit is for us to issue an opinion on whether or not we believe your financial statements are materially correct. And materiality is...
I lose you?
No,
No, my assistant muted me. Sorry about that.
That's great.
Reality is a definitive, it's a threshold that's actually calculated. So it's not super subjective. We actually do a calculation on what materiality is based on the size of your financial statements. So it's not a forensic audit, and it's not an audit designed that specifically for fraud, although we certainly do tests of internal controls to determine whether we believe that the controls that you have in place are functioning correctly. And if we see anything that we believe is indicative of fraud, we would certainly pursue that. But it's not designed to test every transaction that has been made. So I think sometimes that's hard for people to wrap their heads around. When they think of audit, most people think of an IRS audit, and they think of somebody coming in and basically trying specifically to find the things that you did wrong and how much money you owe the government. And we try to view this as a more collaborative approach. So while we are certainly trying to make sure that the numbers that you have presented are materially correct, and we also want to know how they got there, we're not specifically, coming in to try and find fraud.
Wait. So Brittany, first of all, we love kids. We're in the business of kids.
Okay, I'm sorry.
Secondly, been right there with you. I used to bring my kids to board meetings all the time. Oh my God,
Yeah.
right? So do you need a few minutes before your husband gets home? We can just come back to you. You don't have to do this. This is tough. You do whatever.
That's very gracious of you. I very much appreciate it. If you have something on your agenda that you could pop to and give me about 10 minutes, that would probably be better for all of us.
Don't you worry about it. You come back on when you're ready.
All right, I'm just going to turn my camera on and mute myself, and I'll just reappear when the cavalry has arrived. So I very much appreciate it.
Yeah, that sounds good. We've got plenty to talk about.
Okay.
Yep.
Good suggestion, Lauren. All right. So we wanted to talk a little bit about the sub rates. Basically, Pete and I were talking about the sub conversation recently, and he shared that from a staff perspective, they don't want to propose an increase in sub rates at the moment. And so we were going to suggest that it be tabled. Dave, I know you had some thoughts on that. So do you want to?
If we're going to do anything with sub rates, it's going to be February before we do it, before we even talk about them. Okay. So that's over half the year, right? So if we're going to be effective and do something with sub rates to affect subs, the sooner we do it, the better.
the thing is, we don't need to. The need to change the rates is not pressing. So, I think that to think of this as, a fiscal 23 sub-rate proposal is probably a better way of looking at this, and that we do have time to do that between now and or even through the budget season, address that.
What percentage of teachers are not being, teachers that are out are not being done with subs?
So you're making the assumption that the rate is the only driver in our ability to attract subs, and that's
No,
not the
no,
case.
no, I'm not making any assumption at all. I'm asking the first question. What is the need? And then we find out what else we have to do to drive it. But the first question is, do we have a need for more subs?
I'll
That's
answer
the
that
first
question. Well, I'll answer that question as best I can. So the answer to the question, do we have a need for more subs, is always going to be yes. So forget about COVID, forget about everything else. Pre-COVID, we've always struggled to some extent with filling all the open positions with subs, because that's just the way it is. I can't give you a percentage, Dave, because it varies from time to time. So far, I would say that we've been probably lucky in terms of being able to run programs. Like Pete, I don't feel like an immediate change in the sub rate would really do much of anything for us in terms of getting more subs this year. I think it's more a matter of looking at our sub rates for the budget year next year and looking at the market for subs and what other school systems are paying for subs in the area, and just make sure that we're comparable, with other school districts in our market area. That would be my thing. I don't want to rush into simply raising a sub rate and then expecting that that's going to have a big impact on our ability to get subs. I don't think that's the case. I think it's more the case that, right now it's not, I don't think it's a real attractive time for subs to be working in schools. It's very difficult. The job market, the labor ability for employers to hire right now is quite depressed. There are lots and lots and lots of jobs out there. All you got to do is look and you can find a job pretty much. So I don't think there's a pressing need for us to consider this for this year. I think we should do our market research and look at comparable districts and find out what they're paying, and maybe even do some surveys of some of the subs that we have, or do some surveying of the populace in general and see what might make subbing more appealing for folks. Those are my thoughts.
Find out what our, how many actual subs are, how many teachers are not being replaced with subs on an average or on a daily basis. I don't care which.
Yeah, I think we can do that. I think right now it's going to show a higher percentage than quote unquote normal, but I don't know what normal is anymore. I don't know if we're going back to normal, whatever that was. It's kind of
I want to know what the problem is, or if there is a problem. Okay. That's where you got to start, isn't it? To know the numbers. Is there an issue with having enough subs, or isn't there an issue? And what is the issue?
we can give you a number, Dave, if that makes everything more comfortable. There definitely is an issue.
It makes me feel a little happier. If that's, I like numbers. That's just my nature.
But right now, the critical now is due to COVID. And I can tell you that we begin to be concerned when we have about 22 unfilled positions. And that has happened on one occasion about a week and a half ago. And that was concerning. We have probably a natural level of around 8 unfilled positions, which could be open positions. It could be when long-term subs are in them. But probably like today, we probably had 10 unfilled positions.
That's throughout the school system, right?
Yep, that's throughout. That's out of 400 employees.
How many teachers? I don't remember the number. But how many teachers do we have?
We have about 200 under the teacher contract.
But it's also all staff because it's bus drivers and things like that.
All
that would
staff?
be filled.
Right, unfilled generally don't go to. Generally, the bus drivers are filled, and those aren't usually generally unfilled positions.
So have we, the 8 a day being normal is interesting to me. Have we thought about like having
Well,
building?
those could be people that don't need subs too.
All right, okay.
So it's just our natural level unfilled positions.
Well, have we thought about doing something like a full-time sub position for buildings or departments to give us a little bit more flexibility?
We've done that when it financially makes sense. For example, we did that a couple of years ago. We added a position in facilities because it was less expensive to pay a full-time staff member than to pay overtime because you're getting more hours out of that person, even with the benefits. So we kind of, in areas that we could explore that with, we did kind of internally hire our own internal subs. And so we have floating positions that do that in facilities, for example. Ed techs will step up and take over positions for teachers. So it's the ed tech position that's open, not the teaching position in terms of classrooms.
How much do we spend on subs every year?
I don't have that offhand.
I think for when we do the sub rate discussion as part of the budget, I think we do need some of that data. So just use data and also like how much we spend. Because I also think that it's not just a financial concern if we're having trouble finding people and we're not actually successfully filling things, or we're having to ask people to step in ways that may not be convenient. It may actually make sense to have a full-time person just because then there's somebody that you can rely on. So I don't know, I'd like a little more data around that before, if we're gonna have the discussion in budget season. When do you wanna have that discussion, Pete?
I was just mentioning the timing, not through the budget process, but just the timing of the season as opposed to throughout. I mean, I don't think this is really going to be. I don't know. I'll stop there. I'm not sure.
Because I think I agree with you that if it's going to have a fiscal impact, we should make the determination during budget season rather than mid-year. So 6 months from now. But I do also think that we need some more data before we make that decision. So, Maria, Lauren, either of you?
Yeah, I was just thinking, are there permanent subs that are hired to just staff be available at, say, the high school, where you would have, say, a couple of subs, or they're permanent, so they're on the payroll all the time, and they just get their assignment when they show up or when they go to work that day. Is there anything like that?
I think we don't, and John can go into why that may not work.
Yeah, I mean, it's something that we've discussed. We discussed it with the administrators. For a number of reasons, we haven't gone in that direction yet. It tends to, if we do it in a building, so for example, the high school, then those people aren't available for any other position that might be more needy at any given time. So we've tried to keep it flexible in that regard, but we also have long-term subs that are filling in now for teachers and ed techs too, that are actually, they're off the sub market now because we've hired them on when teachers have like a child caring for a newborn, where they've got a health issue or something that takes them out.
Right.
It's kind of a complicated issue, but I'll also say this, it's not an issue that's solely RSU 13's issue. It's statewide, if not nationwide. I hear it from all my fellow superintendents all the time now that it's difficult to get subs. I mean, the labor market is what it is. It's terrible.
Yeah.
I
I know my son tells me what they're doing at his high school, and what they've done is they've asked teachers to take on an additional class.
Yeah.
So he's teaching, I don't know if it's 5 classes or 6 classes instead of one less. he does receive additional compensation for it, but it helps them out. That's why he does it. But a lot of teachers in his school do that. But I didn't know if having and obviously it would depend upon where you have the most need, where you've got a lot of critical mass of teachers, how often does that facility call in a sub? Is it every day? So that if you had one or two people there that were permanent to that building, would they be utilized every day, regardless of who they covered for that day?
Yep.
I don't know.
Yeah.
I don't know enough about it. I don't know how many people are absent, how many people you have in these buildings. It's just an idea. That's all.
Yeah, I think the answer to that is it could be. Right now, one of the things that we've done kind of consistently is we've reshuffled programs with students in and out of the programs. A couple programs we've had to go remote for a day or remote for every other day just to cover the program. And most of these are specialized or special education programs that we've had to do this in. Staffing is an issue, absolutely an issue, no question.
But this is also something we talk about when we talk about the total staffing of the district too, because you can solve your own problem too with just your general staffing level. We are better off than a lot of districts because in this case, we have a lot of ed techs compared to a lot of other districts in the area. So we have a number of staff that can be repositioned when we need to. So I think that's why we're less affected by absences than other districts are, from what I'm getting from those that I'm talking to in the area that are doing my job.
Right.
All right, anything further on sub rates? Okay, so if there are no objections, we will table it until a little further on the budget season. But I think what we're seeing is we all definitely want to see if we're going to make any changes. We want to make sure it's done in concert with the budget change and that we want some more data so that we can make a good decision about what we're doing. All right, sounds good. So we've done new business 3 with facilities. Pete, do you want to talk at all about maybe let's do the fiscal year to date information backwards. So start with school nutrition.
Yep. So I sent along the update for nutrition through December, which includes the federal revenue that we will receive shortly from that. If you look at the bottom of the page 3, under the reported period, you can see that we're about $150,000 ahead of where we were last year at the same time, which was about 30,000 ahead of the previous year, fiscal 20 through December. So from an overall standpoint, we're in better shape. Expenses are really almost exactly where they were. They're very stable for the last 3 years. So it's not a matter of expenses. It goes back to the revenue side of it. And as we've said in the past, the school nutrition program is operating under the summer lunch program as opposed to the school nutrition program, which really means from our level that the reimbursement rate is higher than it was under this National School Lunch Program. So we're receiving more funding per meal that we serve, which is a good thing. For example, our revenue through December, we received about $411,000 so far versus last year of $275,000. So that's really where we are. It will go back to the National School Lunch Program next year. So Darcy's in the process now of setting us up as community schools again, so we can offer free breakfast in the classroom. There's also the new Maine statute that promises free meals for all students. whereas the federal government will continue to reimburse us for our free and reduced students, and the state will make up the difference for our reduced and full pay students. So everybody will get a free lunch. It will be reimbursed, not at full cost, so there will still be a cost to it, but it will get more people, more kids fed, and hopefully allow us to kind of work on our menus, which was RSU's doing, because the ultimate goal is to put together a meal that people want to pay for, even if they don't have to. And so that's what she's working on right now, as well as staffing levels.
Any questions?
I'm just curious, even with all of these free meals, are there still kids who would prefer to brown bag their own
Yes.
food? Okay.
A lot. But we're serving a lot more meals this year than we did last year.
Mhm.
So they are more attractive. There is higher participation.
Well, it's
You know, I
going to
think-
depend on the age range, right, Pete? I mean, I'd assume younger kids are doing school lunch and high school kids are doing more, bringing in their own.
Bringing their own or going off campus, if that's
Yeah.
still. Again, if we can get into the from the food service, from actually running it as a business side of it, the revenue from food service generally comes from a la carte, which is the non-traditional, not the breakfast, not the lunch, but the additional. If you want to serve burgers or pizza in addition to the regular school lunch program and charge for those, that's usually where schools kind of try to make up the deficit. The other thing we're really trying to figure out, and John and I have talked about this, and the committee has over the years, is if we're going to offer free meals for everybody, how can we use technology in a way to get away from having a cashier signing out, who's getting the meal? Because we have to track everybody. We've got to track who is actually receiving this meal. Does the meal actually qualify for federal reimbursement, because they have to have every one of the food items that's listed on the tray. So is there a way that we could, come up with a card system where the student swipes their card when they walk into the cafeteria and they're counted and they take their meal? I've seen that work at another public school up north.
Mhm.
But really, because there's two real costs in any kind of restaurant, and it's called the prime cost, and that's just food and labor, and that's really it. That's usually even in a restaurant that represents 85 to 90% of their total cost. For us, our food cost is reasonable, our labor cost is high. So how can we? I'd rather have our nutrition staff working in the kitchen preparing high quality food than standing there, ticking a checkbox for somebody who's, for the federal government to get reimbursed. So we're also working on that part of it too, to kind of see if we can shave or change the expense side of this program. Because we do, the district does, the taxpayer does subsidize this by $300,000 a year on average. So it's not a, it doesn't, nor I think should it, break even, but it's we like to at least minimize the contribution.
Right now, the cost of the district is $240,000 for the first 6 months.
No, the
Says net cost of school nutrition, $245.30. At the very bottom.
that's the
That's
budget.
the adopted budget.
Yeah,
Yeah.
so look at the column right before that. So the net cost of the programs so far, year to date, is $38,694.
And I
I'm
wanted to
sorry.
make sure I understand those lines. So the expenditures is what we're spending. And then the net cost is the revenue minus, or the expenditures minus the revenue. And the revenue, there,
does not include the subsidy that we raise.
okay,
I wanted to, so to me, to me, that number confuses it. So to me, I want to make sure that this is the true cost of the program without the $300,000 that we do raise. We are raising it, we're being paid it, but I've excluded it from the report to get a better idea of what the system actually, what this program actually does.
and since we've made school nutrition a separate article, whatever is left there, we would need a vote to transfer to, say, the general fund.
Yeah, it's a separate fund. So they're the fund, it would be a fund transfer. And so that would be part of the annual, we tend to, like we do other budget transfers, we'll go and we'll do a, if necessary, do a transfer from the unexpended fund balance to balance that food service deficit if there is one.
And in this case, it would be the other way around because we have.
Oh, there's a deficit right now. So we're just getting, we have less of a deficit now. We didn't make the transfer because the general fund has a deficit too. So we've kept them both running at deficits. Normally, when the general fund gets back to a positive fund balance, annually, we'll make sure that food service fund balance or any other fund balance is set to zero.
At the end of the year or during the year?
At the end of the year.
Okay. So let me get straight. 38,649 is what the net we've spent on nutrition for the year so far?
$450,028.
Okay, but the net cost of school, that's the total cost. The net cost after subsidies is $38,694.
Correct.
And where is the list of subsidies we have? My apologies.
The revenue?
Yeah.
On
I
page
apologize.
one. On page
Page
one.
one. Okay. My apologies for I'm trying to read it and understand it and it's over my head. But we've allocated 240,000 at this point for school nutrition on the budget.
On the budget, but this is one of those funds that the way this program allocates its budget makes that somewhat erroneous because the food service program, with the exception of the director's salary and any kind of overhead, is really a 10-month program. So when the system tries to divide that into 12 months, it makes it, so it's.
You have the summer on it too.
Right. Well, so, yeah, and that's partly because of the program that we're following, that we're actually using, as opposed to actually being in the summer. We're actually under the summer school lunch program in terms of the federal program that we're receiving revenue from.
So
Now I'm really confused.
Peter,
I know.
I'm a little confused too, because, so what we're showing as revenue on page one are the subsidies. It's not the taxpayer funded money that we've allocated from the budget. Is that
Correct.
correct?
Correct.
So where is that money, I guess, is my question. Where is the money, the taxpayer funded money in the budget for school nutrition? Or
It's
is
in here. I just exclude those lines for reporting out to the board because I'd rather see the true cost of the food service program. I think that's more decision useful. I think that the extra revenue sometimes makes us think that the program is making money when it's not.
okay, so just for understanding this, we still have a pile of money, taxpayer funded money that's been allocated to this that we're not illustrating here.
Yep.
So if we go through the full year of school nutrition, and we showed, like, right now we've got that $38,000 deficit. won't that money be used to close that deficit?
Absolutely. Yep.
Okay, and then I think to Dave's point is there'll still be, if things track the same way, there'll still be money left over in that budget. And I think Chelsea, you brought it up. When that money's left over, we would then most likely transfer it to another article that needed that money, correct?
Yes.
Okay. Thank you. I get it now. What I don't know is how much was originally allocated
Isn't
for the
the
first 6 months.
So you can see
530, what was allocated?
so you can see that the program itself has cost us about 10,000. So the program starts in September.
Mhm.
September, October, November, December, 4 months.
Right.
It's cost us $40,000, about $10,000 a month.
Right.
The subsidy from that we receive, what we're raising is 30,000 a month.
Okay.
So over the 4 months, we would have transferred $120,000 into this. So in terms of where we are with the money that we're raising, we're actually would be showing a $80,000 profit right now.
Right. Okay.
So we are generating about $20,000 a month over the first 4 months of revenue over expenses, including the money we're raising from the taxpayer. That makes sense?
Yeah, no, it does.
All right. Any other questions about nutrition? And I think, Pete, we were talking about, I don't have my notes in front of me, February, we were going to do more on nutrition because we're going to be halfway through the year. Is that correct? Or am I?
Yep.
Okay.
Nope.
All right. So we'll come back to nutrition in next month's meeting. All right. Hi, Brittany.
Hello. Thank you for giving me some time to kind of get myself together here. I appreciate it.
You bet.
And I'll be much more composed now. So as I was saying before, the purpose of the audit is to determine if your financial statements are presented materially correct. And so we want to know, is the number on the paper correct and how did it get there? So we're looking at both your financial statements as well as your internal controls. And your internal controls are things that you have in place to prevent error, essentially, and fraud. So it can be, it's things that you put in place to mitigate risk. An example is segregation of duties. So a different person deposits the checks, then opens the mail. You have things in place where you have certain approvers for things like purchase orders and warrants that go to the board for approval. So all those things are in place to prevent error and fraud. So we look at both of those things. We don't issue a comprehensive report on internal controls the same way that we do the financial statements, but we do some tests of controls, which we'll talk about in a little more detail later on, to give feedback about how the things that you have in place are working. So I suspect that you have two documents. One is what we call the SAS 114 letter. It's 4 pages. Do you have that, or just the draft?
We have a letter you guys sent out, yes, SAS 14 on January 12th, and then we have the audit.
Great. So the SAS 114 letter is a statement of auditor standards. And that essentially is pretty standard language where we talk about the scope and the timing of the audit. And then there's usually some boilerplate language about any changes to GASB, which is the Government Accounting Standards Board. So if they've issued any pronouncements, any changes to their accounting standards, we list them here, whether or not they actually apply. But it is standard language that they like to see in these letters. So one of the things that we do talk about is actually on the second page under difficulties encountered in performing the audit. So if Pete was giving us a tough time, we'd list it here, but he did not. So we say that we encountered no significant difficulties in dealing with management. We talk about any proposed adjustments that we had under corrected and uncorrected misstatements. So essentially, we say that we've proposed adjustments and we've provided those adjustments to management. And we also talk about if we had any disagreements with management. So we're pleased to report that no such disagreements arose during the course of the audit. So that's generally, what this letter is, talks about the scope and the timing. If we had any consultations with other auditors, we would list that here. We note that under other audit findings or issues that we have discussions over the normal course of the professional relationship, and our responses related to that were not a condition to our retention. And that we talk about, some things that we'll discuss, any sort of issues or opportunities for improvement that we would have provided. So that's that letter. Does anyone have any questions about that before we get into the meat of the financial statements?
In the past, I feel like this letter has had a little bit of an overview of like, you need to do X or Y. But I didn't see that.
Yeah, you may be thinking of the management letter.
Okay. And that
Which-
I think actually Pete just sent me. Okay.
So there's a management representation letter, and then there's a management letter. So the management representation letter is something that you sign, or Pete signs and sends back to us, where he essentially affirms a list of things like, we don't have any knowledge that someone's going to sue us, and there aren't any material subsequent events, and we've disclosed everything to you, that sort of thing. And then there's a management letter that we issue, which is where we would list things that we found that were not significant enough to alter our opinion of the audit, but they're opportunities for improvement.
That's
and
what I think. That's what I think I'm referencing.
Okay. Okay, so I'm not, Pete, I'm actually not even sure if you've seen our draft management letter yet. Did that get sent to you?
Nope.
Okay, so you will have an opportunity to review that. And I'll talk just sort of a little bit generally about the things that we found and improvements that we've seen made. And then as usual, you'll have an opportunity before we finalize to respond to any management letter comments that we had. And so getting into the financial statements, it's funny because the bulk of the financial statements are in the notes, and the bulk of the notes are related to a pension note disclosure that nobody ever wants to hear about, and also that you have no control over. So it looks like a huge document, and it is. And if you ever want some bedtime reading material, you can read our pension note disclosure. But I'll hit some sort of high level things. So the first place I'll start is page 1. So remember, when I'm talking about the page numbers, I'm referencing the number on the bottom.
That's one real question, quick question before we start.
Sure.
There's a thing called OPED. What is that?
OPEB, OPEB. It's
OPEB, yeah.
other post-employment benefits.
I'm sorry, I didn't.
It's
Other,
post-employment benefits.
thank you, sorry.
No problem. So starting on page 1, we have the independent auditors report. And in this report, we talk about auditor versus management responsibility. So as part of our responsibility and independence as an auditor, we're not making management decisions. We talk about how we're conducting our audit in accordance with government accounting standards. And that requires that we plan and perform the audit to get reasonable assurance about whether the financial statements are free of material misstatement. And then on the second page of that letter is where we actually give our opinion. It doesn't seem like a very exciting paragraph, but it's really the crux of the audit, which is that in our opinion, the financial statements presented here are in all material respects fairly stated. And then we talk a little bit about what's called required supplementary information, or RSI. I'll show you where that is in the back, but essentially it's some additional schedules that we provide to give you additional information and context about the financial position of the entity. So on page 4 is where the management's discussion and analysis starts. It goes from pages 4 to 11. I typically recommend that if you read nothing else, you read this. It's a good summary of the audit. So it's really just a really digestible package of everything that comes after page 11. And it gives a good sense of the changes from last year to this year, the financial position of the entity, and it tells you a little bit about how the audit is laid out, the structure of the audit, and what you'll find in the following pages. So in lieu of reviewing that, I'll review the actual audit. But if you're sort of looking for something or trying to reference something quickly, you may be able to find it in the MD&A, is what we refer to it. So your financial statements actually start on page 12, but I typically direct people, boards and committees to start with page 16, which is statement C. The pages that come before that are government-wide statements. That means that we focus on, in those statements, in the government-wide, on both near and long-term assets and liabilities, which can kind of confuse things for governmental funds because we look at fixed assets and we also look at long-term debt, which for the type of funds that you have is important to know, but it's not something that actually gets rolled into your fund balance when you're talking about your unassigned fund balance. So page 16 is the balance sheet for governmental funds, and that's really where it starts to look like, more like probably what you see when you're looking at your monthly or quarterly financial reports that Pete provides you. So on the governmental funds balance sheet, we list major funds. And again, there's criteria for that. It has to meet certain thresholds based on the size of the organization and the size, how much you have for assets and liabilities, revenues, and expenditures. So your general fund's always major. So you have essentially 2 major governmental funds, and then all the other funds are grouped into that other category. But there is a breakdown of that in the back, and I'll show you that a little later on.
Can I ask one more question?
Sure.
On page 8, there is a thing that says support from towns. Is that the taxes raised? Under general revenues? The top of the page?
Yeah. Yes.
So the taxes for 2021 and 2020 are the same?
They look different to me.
There's $1,000 difference.
Yep. So I can look at what may have been combined in there. It's probably a combination of a couple things. So I can check on that for you in my notes and get back to you. I'm just going to write myself a note so I can tell you what accounts were included in there. Okay. So back to page 16. Typically, what people focus on is the fund balance number. That's what everybody wants to know. But we start with your assets. They are listed most liquid to least liquid. So what can be converted to cash easily. Same with your liabilities. So we're focusing on your near-term liabilities in this statement. And then your fund balances. So you can see that you are still running a deficit fund balance. However, the deficit has been eliminated by about $1.8 million, I believe, since FY20, which is significant. And actually over $2 million of this is the accrued summer salary. So I'm sure if you have been part of these presentations before, that's been discussed sort of when the deficit came to be, what caused that. It's a combination of some things with special ed and the accrued summer salaries. So that gap is closing, and that's really positive. Fund balances are grouped into 5 categories. So anything that's non-spendable is prepaid expenditures or inventory. In the case of the general fund, it's prepaid expenses. You don't carry inventory in your general fund. You don't have any restricted, committed, or assigned fund balances in the general fund, but your other funds do. So if a fund balance is restricted, it's typically restricted by grants, granting agencies, or other external sources. If it's committed, it's typically committed by voters. So if you were to have a positive fund balance, the board may put an article out to the voters asking to use some of that for tax relief, and we would list that in committed. Assigned fund balances are typically assigned by the board. So if you had a special revenue fund and you wanted, for the library, for example, and you said, we want to assign this fund balance so that it can only be used for the library, it would be listed as assigned. And then unassigned is just like it sounds. It doesn't have a category and you can do whatever you want with it typically. Any deficit fund balance is listed in unassigned. We can't assign that to a category. And when we get to the notes in the back, I will show you, we have a note disclosure about fund balance, and we get into a little bit more detail about what's included in these items. So as I said, the general fund balance deficit has been reduced by about 1.8 million. That's significant, and it shows a trend in a positive direction. And then on page 18, we have your revenues and expenditures. So it's a similar statement. We're focusing on the near term, and it's broken out in the same way, the major funds. Not comparative, so this isn't a comparative schedule last year to this year, but we do group these, revenues and expenditures into certain categories. So if you have questions about what's included in those categories, I can certainly check on that for you. And I'm just kind of pausing to give you time to absorb, but I'll keep going and happy to come back to any of this if.
So under revenue, for anybody who watches our budget in this group, $34 million of revenue is over our budget by a lot. So can you just kind of go through what is included in there? This is not the typical statement of revenue and expenses that we just look at for the general fund.
Yeah, so I certainly can. There is a budget to actual in the back that I think will help suss some of that out. So I can skip ahead to that, or we can get to that.
Saying, but there's other things in there. There's, is there federal grant money there or state pass-through money?
It wouldn't be in the general fund. Those would be in other governmental funds.
Okay.
So I'll just kind of.
We can wait to do that.
Okay. All right.
I ask a question here? And it says our total expenses are 32,293,000.
Mhm.
Is that our budget per se? Or in the neighborhood of what our budget is? I mean, what the budget for the year is?
You were under in your expenditures and over in your revenues.
But I'm looking also at a $38 million set of expenditures as well. And is that, why isn't our budget considered?
We're going to get into that a little later, because that's the part that I was pointing out in the revenue side. There's money both on the expenditure side and the revenue side that we don't typically look at in our general fund budget.
Okay,
Right.
but my question, maybe I'm missing this, but my question is, why is $38 million not our budget, not 32 instead of $32 million?
Well, typically you don't warn your special revenue funds or your grant funds, because you don't actually know what you're going to get in. You write the grants in the spring, way past when you would be presenting the budget. So in most cases, you only warn the general fund.
Isn't $38 million, the $38,500,000 our expenditures for the year?
Yes.
Okay, that's why I'm saying, isn't that our budget? Isn't that what we're getting approval from the voters? The 38.
That's not our general fund budget. That's our overall budget, including all of our federal grants, including our, there's $1 million in food service that we don't put in the general fund budget. There's a lot more in these numbers than just the general fund. All we do with our budget for the public is the general fund budget. We don't do Title I, we don't do food service by itself, we don't do local entitlement, special ed,
Right.
federal money. See,
Yeah.
We're gonna have to have a discussion to get my understanding a little better, but this is not the place.
Okay, well, it may become a little bit more clear too when we look at the general fund budget to actual. But if you wanted to sort of compare to what you warned, you would just look at the column that's general fund. And then everything else is other stuff, special revenue funds or investments or scholarships, student activities, that's all in there. So the notes to your financial statements actually start on page 20. And it starts with note 1, and note 1 is sort of a summary of all the other notes. Most of what's in the beginning is actually COVID disclosures. We're required to disclose, changes to anything related to COVID. So we talk about, the executive order issued by the governor and the health crisis. And basically we say that it's too soon to tell. Like, you've received some additional grant funds, but we can't predict or know at this time the full effect that COVID is going to have. And that's a standard note disclosure. We would talk about any implementation of new accounting standards. And one of those is fiduciary activities, that we talk about that on page 22. So that is one that tends to be hitting schools. Prior to FY21, most schools considered student activities a fiduciary activity. But the GASB has said that in most cases, they've really narrowed the criteria for what a fiduciary activity is. So in most cases, student activities are really special revenue funds. And the goal there is to treat those the same way that you would treat any other governmental special revenue fund. So making sure that they're going through the same processes and procedures. And that's been an adjustment for school districts and RSUs and administrative units across the country, really, but we are seeing it in Vermont and Maine. I'm going to skip ahead. I'm just going to try to point out to you some of the places that boards tend to like to look at the most. If you find something else that's interesting and you want to talk about it, again, I'm happy to do that. But boards tend to be interested in pages 36 and 37. It's where we talk about your capital assets and long-term debt. I don't have anything remarkable to point out here, but I do find that it can be helpful, useful for boards to see all the outstanding debt that they have, all the capital assets that they have. It's just a good way, we do list every bond that you have. We list your beginning balance and any payments that you made, and then the balance at the year end and what's due within a year, which we consider a current obligation. We also list capital leases, things like, copier leases, any leases that you have for equipment, vehicles, and in many cases, these things are also ending up on capital assets. So again, for governmental funds, which is the type of funds that you have, these things are presented on the government-wide financial statements, but they don't factor into your fund balance. Only the payments related to them, but the debt itself, the $19 million that you have in long-term debt, doesn't actually appear on your governmental balance sheet.
And so the distinction between the funds on page 37 and the long-term debt, I'm a little confused about that, because some of the long-term debt seems like it's only 1 or 2 more years, and some of it's like to 2036. So why are some of those short-term loans included here?
So anything that had a term longer than 1 year is considered long-term debt. And then we
What's the
list
original term?
with 1 year. Yep.
Okay, thanks.
So anything, a tax anticipation note, for example, wouldn't show here because that's less than a year. But you're right, some of your debt is going to be retired soon. which is helpful in the budget. And then on page 40 and 41, you can see all your restricted fund balances and restricted net position, which is helpful. It just lists everything. So one of the things that is really significant for you are your what we call non-major permanent funds. So those are all the trusts and scholarships. You have a lot of them, and it can be helpful to see that breakdown here of the fund balances. And we do even further along have a schedule that shows you the assets and the liabilities, the revenue and expenditures in a lot of detail. Okay, and then we, in note 10, which is on page 42, we list, as I talked about, your non-spendable fund balances, your committed fund balances. We also list your deficit fund balances, so you can see your general fund here, and then there's some deficits in grant funds, and in some cases, those are, we consider something a receivable typically if it's going to be received within 60 days. In some cases, like the ESSER funds and the COVID funds, there was the ability to request those funds before the application was even in. So we expect that those balances will be covered by future grant income, but because they hadn't been applied for at the time of the audit report, we don't list those as a receivable.
So for example, the adult ed one, just because that's the one on top and it's not a federal fund. So that basically means that we're
It's an error.
expecting.
It's an error.
Oh, it's an error. Okay, so we're not
So,
expecting.
So there's some things that will be changed in this. The only negative fund balances that I'm aware of will be the ESSER funds, the two ESSER and the one food service are really the ones that.
And so the food service, that means that the state just hasn't reimbursed us yet, but they will.
Nope,
Oh,
nope. These are actual negative fund balances.
Okay, I think I need that explained a little more.
So we've spent more than we've received in income through the end of June 2021.
And that was over our contributions as well?
Yes. So
Yep.
it was higher the year before we made progress on it, but from.
Oh, wait, this is the school lunch debt.
This is school lunch program. So
Okay, I was thinking, because we just had the conversation about how it was working. I forgot about
So you-
school lunch debt.
So you can
Okay.
see it goes up and down. So generally a negative fund balance, we would balance out at the end of the year using our undesignated fund balance. But because we've had such a negative, even budgetary balance, we couldn't do that. It just didn't make sense to just make one bigger and just to zero out the other one so we didn't do it. You can see that, if our trend continues this year, the food service should right itself or at least break even at the end of this year. And so next year's budget will be starting from scratch again. The other ones, the ESSER is exactly the case. We spent ESSER money on the expectation that our application would be approved. So we spent it. We didn't have the mechanism yet to seek reimbursement. So for me, I don't feel like I can count that, even though we know we're going to get it. Hopefully, now we do. It did. Usually, I would offset that with the revenue when I sought reimbursement, but these I hadn't as of that day. Really, within 3 months, I didn't. So it didn't make sense. And then the adult education, I think that's an error because, well, there's 3 adult education grants that get used in conjunction with our adult education general fund, and that money was being spent in the wrong grants, in the wrong funds through the year. Our adult ed director had a personal loss and took a leave of absence, so we're fixing that now.
Yeah, and I know Pete, you mentioned that there were a couple things that we needed to correct before the final, just based on some entries that were made. So we'll definitely get that corrected.
like that, there's nothing substantive. We're just going to move money around between the funds. Nothing's going to change the bottom line or the accuracy of the overall district-wide financials.
And then on the next page is where we start the defined pension benefit plan note. As I said, that's the,
Come on, go back to page 42, the last number on page 42.
okay, I'll talk. All right. So
It's positive. It's the
that's
first
great.
time in years it's positive.
it's great. So we say the negative fund balance is 2.1 million. We wanted to note that accrued summer salaries were 2.6 million. So if that had not been the case, you would actually be in the positive by 581,000. So it's great. That's great. So that's much more exciting than the pension note, much more
I think
exciting.
so.
I actually read last year. I learned I don't need to read it.
Yeah. And then, so I'm just gonna skip all that, but if you have pressing questions about main PERS, happy to talk about it. So starting on page 64 is where we call it RSI, required supplementary information. And that is where we list some additional schedules, break some additional things out for you. So here's the budgetary comparison schedule. This is the budget to actual just for the general fund. And again, I'll check on that support from towns number. So we list it typically by article, well, by article, I guess I'll say. So you can see in the outflows, which are expenditures, instruction, special education, career. So those will look really familiar to you. So you can see what the variances are there. Transfers to other funds, that's sort of what you were talking about earlier. Part of it's related to the food service, and part of it was like a contingency sort of item, which I think is split out in future years. But you can see you under expended in your expenditures, and you got more revenues than you planned on. So that's how you ended up eating up some of your fund balance deficit. We have a couple things highlighted here, which will go away in the final, but just some things that we wanted to clarify and ways that we combined accounts in the revenues that we wanted to go over with Pete before we finalize and make sure that it's categorized in a way that makes sense. And then you can actually see in a little bit more detail on page 75, we call it the schedule of departmental operations. And that's for the general fund. So this breaks that down into even more detail so you can sugar out a little bit more of where you ended up for specific categories. So we break down instruction into elementary, secondary, alternative ed, ESL. Same with the other categories. So we just get into more detail there.
How do you guys determine those breakdowns? Because they look similar to the ones we use with the state. So there's a standard?
Yeah, it's by the account code,
Okay.
which is standard. So. And then on page 80 is where we start to give you some of the breakdowns of the non-major funds that were grouped together earlier on. So the special revenue funds are first. So Pete referenced the adult education and how that will be corrected. You can see student activities in here. This is where like any small private grants that you get would go here. This is also where your federal grants are. So things like Title I, IDEA B, ESSER, food service. All the breakdowns are here. So you can see that. And then the first 3 pages are the balance sheet. And then the next 3 pages are revenue and expenditure for the same accounts. And you can actually see the beginning fund balance and the ending fund balance. So if you were to look on page like 85, you can see the change in fund balance. So that can be helpful too. And then for you, a really significant area are your what we call your non-major permanent funds. Those are all your trusts and scholarships. And that starts on page 93. So again, the first, I don't know, it's probably 5 pages, 6 pages are the assets and liabilities related to those. And then the next 5 or 6 pages are revenue and expenditures for the same. You can see beginning fund balances and ending fund balances. So you can kind of monitor the change and what's been going on there. So we show your investment income, any program expenditures, which are typically distributions, but they can be like bank fees or things like that. And in the case of investments, it's change in the value, things like that. And then we're nearing the end, I promise. Sort of on page 108, we start talking about the single audit. So if you expend more than $750,000 of federal funds in a year, you have to have additional compliance testing. It's what we refer to as a single audit. We have to select the major programs, again, based on a formula, based on what you spent for federal expenditures. So page 108 is what we call your CFA. It's your schedule of expenditures of federal awards. So you can see that there's some significant coronavirus relief funds that were added there. So your total federal assistance this year was about $5.4 million. Everyone's seeing a lot more than usual. And that has brought with it some additional compliance testing, which everyone has really enjoyed. And we talk a little bit about, on page 109, the basis of the presentation of the CFA. And then we actually have to issue another independent auditor's report. So we issue one over internal control, over financial reporting related to the financial statements, and then another one related to the major programs in the single audit. So on page 110 and 111, essentially we say that we didn't identify anything related to the financial statements that we would consider a deficiency in internal control, a significant deficiency or a material weakness. So that's a very positive thing. So some of the things that we're checking when we're looking at that is if it's your policy to do purchase orders, did you do them? If it's your policy to have 2 signers over a certain amount for checks, did you do that? Were you able to provide adequate backup for your deposits? Are you doing your bank reconciliations timely? So we're checking all those things. And we're saying that we didn't identify anything that's so grievous that it belongs here. There may be some things that we found that were opportunities for improvement that will go in the management letter, but nothing was severe enough to end up here related to the financial statements.
And actually, when you say policies, those are not board policies. So you're talking about sort of the procedures that our staff have created. And part of the reason I'm sort of flagging that is because there's an item that keeps coming up on their future agenda that Pete wants to review the accounting procedures manual. So that's kind of, that's I think what you're referencing. And I want to flag for the committee that that's something that we're going to be looking at some point.
That's what we, so even though it was not approved, that's what we operate under. And so every year during the audit, the first part of the audit usually is an interview. And so we kind of walk through, depending on who's doing the audit, our processes and how we, for example, every check that comes in the mail goes through John's office and gets logged in that way before anybody gets it. Even if somebody hands me a check, I hand it back to Kathy and she logs it in before it comes back to somebody to deposit it. So we just the purchase orders, the electronic purchase orders, the even time cards. So
yeah.
So all these things are, and I just and part of the accounting procedures manual includes the student activity accounts, which is, again, in terms of risk, student activity accounts and food service are generally the highest risk areas because there's cash and there are also untrained people using them in terms of student activity, who's writing the checks. So
it's decentralized, which is also adds risk. So it's not processed in the central office in some cases. So in some cases, it could be a policy or it could be a procedure. Essentially what we're looking at is, did you do what you say you would based on your practices? So for you, it's largely procedures for RSU 13.
What do you, are we looking at page 115?
Yeah, we're getting there. So we were just looking at page 110, which is the report over the financial statements. So the next part is our report over compliance for each major program. So the programs that we tested were Title I and Coronavirus Relief Fund, so Title I and CRF. And we did have some findings related to those programs. They're summarized sort of starting on page 116. And so I do want to say that looking at our test work, so we select a sample from a wide berth of options. So we look at things from the beginning of the year, the middle of the year, the end of the year. So while we did have findings, if we were looking at things closer to the end of the year, we could see improvement. So we found less issues with things toward the end of the year. And we didn't identify question costs. So what we're saying is there are some things that you need to do better to comply with the grant provisions, but there's no suggestion of nefarious intent or anything like that. So, you know, the first thing is not having contracts or wage agreements in place for all employees in federal programs. So it's all about documentation. Sometimes what gets people is, even if you're doing the right thing, if you're not documenting that you're doing the right thing, that's what ends up in these type of letters. So for Title I, go ahead.
Oh, can I just clarify? So when you're talking about the documentation, because this is something that came up in the one that you audited last time, but we're auditing a different fund. So those issues would not necessarily.
Well, Title I's the same one.
Yeah.
And it's-
Well, I was
and-
thinking they were the
but just
Century
remember-
21.
Remember
We did both. We did
Title
two.
I.
Yeah,
We did two last year. Remember that when our audit was prepared last year, it was at the end of May.
Right.
So those were from fiscal 20. So the corrections that were identified, or these that were identified in the fiscal 20 audit weren't even noticed, weren't even actionable from our standpoint until June, which is when everybody leaves. So the only time that we can correct it is this fiscal year, which hasn't been audited yet.
Yeah. So that's why I'm kind of trying to point out that, you know, we saw improvements. I mean, obviously you didn't just create contracts for people in June, but we definitely saw a trend toward improvement in really all areas. So I don't want you to feel, I don't want to be too down, because, well, there are findings and things that we have to point out related to the federal programs. We didn't identify question costs. And in the corrective action plan, they'll have the opportunity to talk about the improvements that have already been made and improvements that are going to continue to be made. So it's a little painful from that respect, but here we are.
Only for me.
It's painful for us too. We don't enjoy it. We really don't. But it was a pleasure to work with you and just kind of see the change from the past couple of years to this year, and just kind of seeing how things have been working out. So there's something that you have to do with federal grants called time and effort certification. You have to track really closely how much time people are spending on each grant program. So that's something that needed work. And then we also had a finding related to procurement. And this is a really tough one, guys, especially for CRF. So we saw this, I will tell you, sort of across Maine and Vermont. Every purchase that you make with federal dollars has to follow certain procurement procedures, and there has to be documentation of it. And with coronavirus relief funds, it was absolute insanity, trying to figure out what was going to be covered, what wasn't going to be covered. And there's a lot of additional paperwork to do for this procurement. So in some cases, people didn't even originally know that it was going to be federal funds, but then they moved it into federal funds and things were kind of all over the place. But again, we have to note that there wasn't procurement documentation. But I mean, I think moving forward, now that you kind of have a better handle of what's going to be covered under CRF, hopefully this won't be so much of an issue. But I will tell you that we saw this in a lot of clients.
Can I make just an editorial comment on that, which has nothing to do with auditing, but
Sure.
The whole start of the CRF process was extremely confusing, even at the state level. And we had people at the state that couldn't tell us when these funds were coming, how to spend the funds, how to get it approved, what the process was going to be. So, I mean, this was every superintendent and business manager's nightmare.
Yeah.
And I recall having conversations with the board at the time that, you know, the board needed to give us latitude because in some cases we had to spend money really, really, really quickly that we didn't even have. So I don't find this unusual at all. And I'm betting, yeah, you did find this all over the state because I heard about it all over the state.
Absolutely. Absolutely. So that kind of brings us to the end of the report here. I will tell you that when you see a draft management letter, there were a reduction in the number of comments that we had from last year to this year. So again, as Pete pointed out, like the audit was late last year. You didn't really have the opportunity to implement some of the improvements that we pointed out. So we are seeing some repeat things. But also a lot of improvements, especially when you look at sort of the trend from the beginning of the year to the end of the year. And one of the comments is your negative fund balance, right? That's a standard comment, and obviously you're on the way to improving that. You know, some of the other things are related to student activities, which, as Pete said, is kind of a hotbed for these kind of things. And I know Pete's been working on that a lot. And then cash receipting, we saw some issues where deposits weren't being made as quickly as we like to see them be made. And I wonder if some of that was just a function of people being in the, again, that's a comment that we saw with a number of people. Some of it just had to do with kind of staff availability and people being in and out and things like that. But that's really all. And it was quite a bit shorter than last year, quite a bit of improvement.
Well, thank you very much. This was helpful, and I really appreciate that you went through each of the sections, because a lot of them you read through and you're not really sure how to interpret them or what to focus on. So I appreciate that insight. I have two sort of high-level questions, and then I'll see what questions other people have. So last year you guys made some changes, and I know one of those changes was us actually making sure that we were formally approving external transfers on a board level. Were there any changes that you noted that we should sort of flag to change our policies or procedures this year?
The only thing procedurally is we like to see student activities be fully incorporated into the financial software if possible. And I think that has been started at some degree, but not maintained, at least during FY21. So ideally, everything that you do would be recorded on your financial software and not somewhere else like QuickBooks, a lot of schools do.
Okay. Is there anything on sort of the board level we should be thinking about in terms of policies or so forth?
I don't think that I have anything that I noted at this time. When Ron sort of does, I'm sure you are familiar with Ron, when he does his final review, I'll pick his brain just to make sure, but I didn't see anything that I felt needed to be brought to you tonight.
Okay, excellent. Well, thank you. All right, anyone else questions?
No, I just want to thank you, Brittany. Wonderful job. Thank you so much. Appreciate your time for our school district.
Yeah, thank you. It was a pleasure.
All right. Pete, John, any last minute audit things to say?
Nope, just thanks, Brittany. Appreciate it.
Great. Well, I will email Pete that answer about what's included in support from towns. He'll have that in the morning and he can report back to you. And we'll get this finalized.
All right. Well, thank you for spending your evening with us.
No problem. Have a great night.
Yeah, y'all you as well.
Thanks,
Bye.
Brittany.
Bye.
Take care.
All right. So we are over time. So I want to wrap things up fairly quickly. We only have 2 items left. One is the CARES and the other is the year-to-date general fund. So Pete, do you want to spend a minute or two giving us an overview and see if people have questions?
CARES I have nothing for, so
Okay.
that's easy. The general fund, similar to whatever that page was, in terms of the summary budget that we use, it's very similar to the audit by article, the two-pager.
Yeah.
We are, halfway through the year. We have, because of the way the payrolls have landed, we've actually had 14 pays out of 26 pays through December. So we would expect to be about 54% spent. If you think of, pay periods as kind of your goal, for me, that's kind of the goal because payroll is such a high percentage of our budget. I looked at that kind of where we should be spending. We're actually at 51% spent right now. So we're about 3% underspent, which to me, I forecast that will probably be about $1 million underspent given that same rate. We still have the same revenue forecast as we have had. The additional subsidy is included in that. So it looks like that overall, the forecast will be to have revenues over expenditures of a little over $2 million, which should get us back to a positive GAAP fund balance and a good place to be in our budgetary fund balance. Still not to where we want to be. I think we still want to have be at about $1 million in terms of our GAAP fund balance. So we're about $3 million away from that as of the end of last year, but getting pretty close to that. We can control a little bit of that by transferring money to our capital reserves and other reserve funds too, so that will also protect more money and give us the ability to cash flow ourselves. So there's nothing that is concerning for me on this. It's boring as usual. Nothing in the future that we see is going to change this right now, but tomorrow's a different day. And
Oh, good.
go ahead.
I was just asking, so we're still carrying the, sorry, my windows are not clear. We're still carrying the sale of assets. So I was wondering if we could get an update because my impression was we were selling the iPads and everything in the fall.
As far as I know, we haven't gotten that check yet.
Okay, so we've already sent everything in, but we're waiting.
It's all, yeah, everything's been gone. They're going through it all, and I mean, you remember the original estimate was about 380,000. So we'll I'll let you know when we find out.
All right. I guess I was just, I didn't realize it would take them that long once we sent it back.
Yeah.
And can you just clarify, so the additional revenue for the state, you're including that in the amount to the undesignated fund balance line. Is that accurate?
That's where it would go.
Okay. Have we received it yet?
We receive a portion every month.
So the extra $1 million that the state gave us, they were rolling out over a monthly basis. It wasn't like a check.
So you'll see when we do a revenue forecast, you'll see that we're more than halfway done with we've received whatever 55% of our state revenue, even though we should be at 50.
Okay. those are all my questions. Anyone else have any questions? Okay. Anything else, Pete or John, that you guys want to add?
Nope, we're in the process of buying 2 new buses. Because they're working so far out in terms of production, the 2 buses that will be getting delivered at the end of this fiscal year are stock buses that are going to production in May. The buses that we hope to be buying next year, we're going to put the order in, but they won't even go into production until next October at this point. So we're just going to get the order in.
Question about that. So speaking of procurement, wouldn't those expenses be high enough that we have to go through the policy on DJ, which I don't exactly remember what it was, but it seemed, I remember it triggering it, something triggered at 50,000.
Because it's, well, first of all, it's not federal. The second thing is we use the state procurement contract for this. So these bus manufacturers have already put their bids into the state. So it's a statewide contract. And they've already set the price. So it's done for us. If we were to go outside the contract and go to another, if we were going to get an electric bus from International instead of Lion, we'd have to go through the process. But if we ever buy an electric bus, it's going to be through Lion probably.
Okay. All right. So the local procurement process is only for things that we do outside of federal and state.
Right.
Okay. Okay. All right.
I just had a quick question. Was October of 22 or October of 23?
October of 22 in the fiscal
second
23
group.
school year.
Okay, I got it. Thank you.
And what we do is we try to, in order to keep our bus not new, but not too old, not too long on the tooth, is we tend to replace about 2 buses a year, and that keeps us up with buses that keeps it in a good place in terms of our bus mechanics.
Okay, thank you.
All right. If anyone has any future agenda items, let me know. And that would include the policy when you guys are ready to see what the next steps are.
Just to be clear, it's the ability to transfer funds from not one article to the other, but within an article. That's the policy that you want written.
Well, what we were discussing was simply having committee notification when internal transfers of a certain amount were made.
So an article or article to article or both?
Within article, because we already have an article to article policy or procedure, one of the two. I think it's state mandated regardless.
It's a statute.
Yeah. So at any rate, so we have the article to article. So what we were looking for was simply that within the year, we would be made aware of these things.
Okay, got it.
So fund to fund needs the voters, article to article needs the board. Within the article is what you're talking
Sub-article
about.
within an article. Okay.
Yeah, and feel free to reach out if you guys have any questions, although Pete would probably be a better person to reach out to.
What's the correct terminology for the charge classifications within an article so that we use the correct terminology?
Intra article?
No, I think she means the codes. Codes maybe?
Like a charge code within an article, is that correct terminology?
I think it's probably the terminology is probably cost center, not article.
Okay, cost center within an article. Okay, got it. That's good. Thank you.
All right. Sounds good. Well, we will
right.
see you guys all Thursday night. And our next meeting is February 15th.
Okay.
All righty.
All right. Good night.
Have a good night.
You.
All right.